Imagine for a moment that somewhere in the middle of Texas there was a large foreign military base, say Chinese or Russian. Imagine that thousands of armed foreign troops were constantly patrolling American streets in military vehicles. Imagine they were here under the auspices of keeping us safe, or promoting democracy, or protecting their strategic interests. Imagine that they operated outside of U.S. law and that the Constitution did not apply to them. Imagine that every now and then they made mistakes or acted on bad information and accidentally killed or terrorized innocent Americans, including women and children, most of the time with little or no repercussions or consequences. Imagine that they set up checkpoints on our soil and routinely searched and ransacked entire neighborhoods of homes. Imagine if Americans were fearful of these foreign troops and overwhelmingly thought America would be better off without their presence. Imagine if some Americans were so angry about them being in Texas that they actually joined together to fight them off in defense of our soil and sovereignty because leadership in government refused or were unable to do so. Imagine that those Americans were labeled terrorists or insurgents for their defensive actions and routinely killed or captured or tortured by the foreign troops on our land. Imagine that the occupiers' attitude was that if they just killed enough Americans, the resistance would stop. But instead, for every American killed, 10 more would take up arms against them, resulting in perpetual bloodshed. Imagine if most of the citizens of the foreign land also wanted these troops to return home. Imagine if they elected a leader who promised to bring them home and put an end to this horror. Imagine if that leader changed his mind once he took office. The reality is that our military presence on foreign soil is as offensive to the people that live there as armed Chinese troops would be if they were stationed in Texas. Shutting down military bases
and ceasing to deal with other nations with threats and violence is not isolationism. It is the opposite. Opening ourselves up to friendship, honest trade, and diplomacy is the foreign policy of peace and prosperity. It is the only foreign policy that will not bankrupt us in the short order, as our current actions most definitely will. I share the disappointment of the American people in the foreign policy rhetoric coming from the administration. The sad thing is, our foreign policy will change eventually, as Rome's did, when all budgetary and monetary tricks to fund it are exhausted.
Buckle your seatbelt. It's time for another episode of the Prepper Recon Podcast. I've personally been buying gold and silver from JM Bullion for over 2 years. They offer the best prices over spot that I can find, and I've never had a problem with an order. If you're looking to trade in some of your fiat paper for real money, check out jmbullion.com today.
Our individual first aid kits are now on sale. They're MOLLE-compatible pouches in Coyote, ACU, OD, or Black. They're equipped with an Israeli battle dressing, quick clot, TK4 tourniquet, suture kit, and lots of extras. It's perfect for your car, bug-out bag, or home first aid kit. Go to the PrepperRecon.com homepage and click on the IFAC store tab at the top of the page. They're on sale for $89, and that includes shipping. This kit could save your life.
Today's guest is Fabian Calvo of FabianForLiberty.com. Fabian, welcome back on the show.
Hey, thanks for having me, Mark. I always enjoy it.
Oh, absolutely. Absolutely. It's an honor to have you on the show. Now, there's no shortage of economic news. Argentina defaulted on $1.3 billion in bonds. Is the global economy in trouble?
Well, certainly the central planning gimmick Ponzi scheme economies that we've seen around the world are in trouble, and those are economies that have, in essence, ballooned their deficits to a level that's completely unsustainable. And the only way that it's sustainable is if they meet the demands of the central bankers and of the renegade Wall Street bankers. And that's certainly what happened with Argentina's case, is that you have a merging, if you will, of just too much entitlement, too much deficit spending, and basically being held hostage at the same time by people that I think, Mark, are I mean, this is like for example, in my real estate business, I go out and I look for a good real estate deal. A lot of these hedge funds and big Goldman Sachs, JP Morgans, they look for big economies that they could implode, so then they could swoop up and buy the assets of the company for pennies on the dollar. So for them, that's the kind of deals they look for, and they use the cooking of the books. They use the over-leveraging of these countries' balance sheets, like we've seen in Greece, Portugal, Spain, and that's the end result. So doesn't surprise me. Argentina is by no means the only country that faces the wrath of a dollar that will eventually default and of rising interest rates and everything else that goes along with centrally planned economies.
Now, speaking of cooking the books, $1.3 billion sounds horrific, but if the U.S. devalued its currency through monetary creation by 10% last year, I think that $1 trillion on top of $10 trillion into monetary base is a 10% devaluation if you look at it in terms of money supply. If we owed 17.5 trillion, haven't we defaulted on 1.75 trillion? That's 1,000 times worse than Argentina's default.
Yeah, that's a very interesting point, Mark. I mean, look, there's no question when I talk about dollar devaluation, or when it's brought up and you talk about the U.S. potential default, you get a majority of people, from the man on the street to even the so-called financial planners and pundits on CNBC, that'll tell you it'll never happen. We're too big. We have way too much access to credit. We have central bankers that can print money. Well, if you look at just the target inflation rate of the Fed of 2%, and you look at and you extrapolate that out 30 years, understanding they've already been doing that for at least 10 years, keeping rates at record lows, that in and of itself is about a 33% devaluation of the dollar, roughly, a little bit more. And so by their own measure, and that's where I like to judge them, it's like, let's judge them on their own policy plans. And we see that it leads to pretty much economic destruction for the middle class and the poor, because those are people that are just completely unprepared for, and let alone have a conscious comprehension of what these criminal bankers are actually doing.
Now, and you just mentioned interest rates. Now, the Fed's cut quantitative easing to the official number, and I don't know how realistic that is, but they've cut it to $25 billion a month, and a lot of folks think that we'll have completely tapered all the way to nothing by October. Why aren't interest rates going up? Do you think there's a big market for negative real yields? Because, as you mentioned, with even the official number of 2% inflation, if you're getting 1.6 on a 5-year bond, that's you're losing money.
Yeah, well, I'll first say that I think that history will judge this period of time, Mark, as the largest Ponzi scheme of an economy the world has ever seen. So, call me a conspiracy theorist. I don't believe the Fed has tapered to 25 billion, nor do I believe that they will eventually get it down to zero. I think there's a lot of different things that have happened, that one of them being Belgium buying roughly 42% of their GDP in treasuries over the course of a few months. There's been a lot of things like that to me say there's no way the Fed's doing it. What they're doing is they're doing off-balance sheet gimmicks, smoke and mirrors to keep it propped up. And the best evidence of this is how can they possibly be tapering when interest rates have remained so low? The question begs, as the Fed has tapered, who has stepped into the bond market to make up the buying demand, the artificial buying demand by the Fed? I mean, it certainly hasn't been any sovereign country, other than if you look at a country like Belgium, which is extremely, just very, very concerning in that it's just so outrageous. That there's some kind of backroom deal going on there. But aside from that, it's certainly not the average investor on the street that's doing this. I mean, if anything, the dollar's reputation around the world is dwindling. We see this just recently with the BRICS wanting to open up their own IMF bank or World Bank. So I think, I think it's gotten to the point, quite frankly, Mark, where the central planners, the central bankers are running scared, and they're trying to manage this decline as best as they can. And one of the primary methods of management is deception.
Were you surprised to see GDP jump 7 points from -3% to 4%? Does that sound like off-balance sheet smoke and mirrors? That's got to be a record quarter-to-quarter jump.
Yeah, I mean, I actually broke this down on my podcast where this is another perfect point. And you see here how the growth in that particular 4% was, for example, in furniture sales. And if people drive around, they'll see these furniture stores that basically say, well, you can buy today with no money out of pocket, 0% interest for 5 years or however long it is, and that counts towards GDP. Or another sector was car sales. And we know that, for example, GM's subprime loans account for roughly 80% plus of our car sales. Another one was multifamily and housing. Well, a buddy of mine who's probably in the top 5 commercial lenders in the U.S. is telling me that, of course, there's demand in that market because you have a lot of big apartment building owners that are refinancing or buying using Fannie Mae loans that are 3% loans, maybe 4% at the most, fixed for 30 years. There's no other product on the market like that. So you have a huge artificial demand created in that sector. Let's move into housing. Housing, you have billions and billions of dollars pouring into the real estate market from these big hedge funds on Wall Street that are buying, and also from international investors around the world. And lastly, that made up that particular 4%, which is totally a bogus number, but let's just go along with the U.S. Commerce's report, was increased spending by state and local governments. So you see, Mark, it's really no real growth going on. In fact, any of this is really either attributed to inflation or attributed to, which is, I've always argued, there's been less production. It's just that things cost more money now. And that's in the crazy land, U.S. economy world that we live in is called growth.
Yeah. Now, back to what we were talking about of the devaluation of the dollar. How can people preserve their wealth against this stealth form of default that the Fed's creating through monetary creation?
Well, look, there's a lot of different ways, and I think for some of these ways, people have things that are intuitively, make more sense to them. Obviously, people always talk about gold and silver, and I'm a big believer in gold and silver. Other people might lean towards something like Bitcoins or cryptocurrencies. I personally am a little bit I'm a little skeptic of not so much cryptocurrencies, which I really like, but of what I believe to be a large bubble in something like Bitcoin. There's things like real estate, which I'm big into, that I really like, not necessarily holding long term, but finding value and unlocking that value. But I think for me, Mark, the number one thing is being able to operate a business. Whether it's an online business or a business that you believe can be depression proof, that's where I think you could really have something where you can build monthly revenue. You can if you're online, you can tap into the global marketplace. And so I think for me, that's the best thing. Investing in yourself, investing in your passion and idea that you have is, I think, one of the biggest bang for your bucks.
And the last time you were on, we talked about subprime loans coming back in fashion. Is that still happening?
Certainly still happening. It's going to happen in a couple different ways. But as we mentioned the last time, there's just an abundance of evidence of all these big lenders, whether it's Skyline Financial, Wells Fargo, bank, that are engaging in subprime. Bank of America recently hiring the ex-big loan guy over at Countrywide to be their chief executive of the loan department. They want to bypass mortgage brokers and get into the subprime market directly.
Oh, well, he's the guy to have.
Yeah, exactly. That's the guy who oversaw one of the biggest, saw a portfolio that ultimately is going to cost Bank of America roughly $30 billion in losses. And so, not only is there all that evidence, but what we've seen is Wall Street become the biggest landlord in America. And whether it's Blackstone, whether it's American Home for Rent, these countries that own hundreds and hundreds of thousands of properties, and that they're just the real big ones. Below them, there's a ton of them as well. And so what these companies, I think, ultimately are going to do, Mark, is they're going to start to, and they're already doing it, they're basically going to sell loans to, or sell these homes They're already doing it to people that either live in them or to a potential buyer. It will be a subprime type loan in the sense that they'll get in with no money down. And I wouldn't be surprised to see the government back that in some way, or ultimately allow them to refinance with some kind of government-backed program. So the subprime loans are underway. They'll speed up even more after the midterm election. But the Wall Street bankers they've smartened up that they can't exactly repeat the exact verbatim playbook that caused the '08 implosion. So they need to go about it a different way.
And Blackstone's they're actively selling their properties now? They're not acquiring anymore?
Well, they're acquiring, and they're actually in what's now deemed the acquisition phase, which is basically you have the largest hedge funds that have gotten into the real estate market are now buying smaller companies. So the $1 billion company will buy the $100 million company that may own 15, 20,000 homes. In fact, one of the CEOs of a company called Colony Capital was talking about how he was quoted as saying in Bloomberg that the acquisition phase of this real estate market will be even larger than the buying phase that took place from '08 to roughly 2012. And so that's why I stick to my analysis that I've had now for a few years, which you're going to continue to see real estate prices continue to go up in value. Again, it's all a Ponzi scheme, and it's all a big manipulated market like the stock market. And I think ultimately when the crisis hits, you're going to see the real estate market, the stock market, all of these markets simultaneously have a big devaluation.
And you've said before that you think that it's going to be after the midterm elections in November we'll start to see something similar to like the ninja loans and the liar loans coming back.
Yeah, I mean you're already seeing what you see. Like I said a little bit earlier, how they're going about it a different way. So they're already doing things like that in the sense that you may have Fannie or some other financial institution put up 80 or 90% of the purchase price, and then what you've seen is the feds actually give money to states and to local governments so that they could put up the balance of the down payment for somebody can get the loan, buy the home with 100% financing. And this is happening. I mean, I probably get, I don't know how many emails a week, at least a dozen, if not more, people telling me stories about that are involved in real estate or one way or another, telling me stories about how they see this happening. So yeah, I think it's already going on now. After 2014, I think you're going to continue to see it. You're going to continue to see a rise in the the ninja loans and the no money down loans.
And now, how do we play this? Do we get in the housing market now, or and try to get out in 2 or 3 years, or should we at this point wait for the bubble to pop? I mean, is it if we're getting in now, are we what the Wall Streeters call the dumb money, or can we still? Is there still money to be made from here?
Well, I personally love the real estate market. I don't necessarily get into a market to try to time the market and get out on time. Instead, what I do is I look for valuable real estate deals, and then I will, in a very short period of time, trade that value to somebody else. So if I buy something today, I'll look to sell it tomorrow because I bought it right and I could sell it right. And so that's more, I think, how to navigate this particular market than buying something and holding on to it thinking it's just going to keep going up in price. That's usually never a good investment strategy unless you're buying into something that's more like an insurance policy like gold or silver.
What about if you're buying rental property and you're getting it at a price to where you're going to get a positive cash flow? Maybe it's $100 or $200 a month positive cash flow. Would you recommend doing that at this point?
Well, here again, that's not a bad idea, Mark, if listeners can get in with little debt. If you're leveraged and you're needing the $200 cash flow to make the mortgage payment, when the next shoe drops in this real estate market, you're going to see the same thing happen that happened in 2008, but it'll be much larger. So what will happen is there'll be a flood of vacant properties on the market. There'll be a flood of rental properties available. And so unless you have the ability to weather that storm and to keep your buildings or homes rented out, you're likely going to have several months where you're not going to have a tenant to rent your home because other people will be desperate to rent their properties. So, I'll tell you, I know a lot of people, including myself, that were able to get past 08, 09, still have real good positive rental properties, cash flowing. It's because there was little debt and we could weather that storm. So people just got to really plan accordingly and be aware that if you're, in the market that I guess a good rule of thumb here would be, how did that market that you want to buy in or that you're interested in buying it, how did it perform after the crash in 2008? Did vacancy rates surge to 30, 40%, or did they stay in that 7 to 12% rate? And that'll kind of give you an idea. Okay, well, I could survive 7 to 12%, but 40% is going to be difficult, particularly if I have a single family home where if I don't have a tenant, I'm out the money. If I have a duplex or a triplex or a fourplex, if I'm out one tenant in a 4-unit property, at least I have 3 other people paying rent.
We're going to take a quick break and we'll be right back. Katie Armor offers affordable body armor, including level 3 trauma plates made of AR-500 steel. They can endure multiple rounds from pistols and rifles up to 7.62 NATO. Their plates are available with Rhino Linings coatings to reduce SPA. Go to katiearmor.com, that's CATI armor.com today. Now, we're going to shift gears a little bit and talk about another subject. One of the things you cover a lot on your podcast is about folks changing their mindset and getting out of the job paradigm and start thinking like an entrepreneur. What's one of the first things that a person needs to do to start becoming financially independent and independent-minded?
It's a great question, Mark. And I would say, I talked about this yesterday. I would say it's what's your thinking like? What's the difference? If you look at what's the difference between successful people and unsuccessful people, understanding that the definition of success for everybody will be different. So I'm not even going to get into that because whoever, the listeners, they themselves can judge as to what is their definition of success. But that said, we know that success is something that isn't specific to any one group. I mean, as we stand here now, there are people from all backgrounds, all ages, across all continents that have achieved success. And whether you want to tie that to wealth, to spiritual happiness, to health, to a great family life, it is what it is. In this context, talking about finances and being able to get out of the job paradigm, I'd say that it's important to see how we think. Unsuccessful people and successful people have something in common. They both have dreams and aspirations. The difference is the unsuccessful person says, I can't do that, I don't know how to do that, or I don't have the resources to do that, and they just allow their dream to dwindle and they get stuck in the job paradigm. The successful person says, you know what, I don't have the money, I don't know how I'm going to do it, but I'm going to do it anyways, and I'm going to just keep on trying until I figure it out. And certainly that's been the case for me. It's been the case for most of the overwhelming majority of successful people I've met. So that's where I would start. I mean, what do you really want in life? And, have you allowed time or have you allowed excuses to stop you from trying to achieve that dream that you have?
Now, is it important to get a hold of your spending and your debt? After all, if you're working 60 hours a week just to keep up with your credit card payments and your car payments, it's hard to find time to create your own business or even start getting educated about how to even think differently. Would you recommend maybe having a smaller apartment, maybe wearing some less fashionable clothes that you paid cash for at Walmart instead of going to Abercrombie and Fitch on your credit card? Maybe getting like a beater car that you can pay cash for instead of having a $500 a month car loan and insurance on that?
Yeah, I agree 100%. And basically what you're talking about, Mark, is the concept of delayed gratification versus immediate gratification. And, unfortunately for the masses, we live in a world of immediate gratification where you want things now and you get what you want. And through the endless amounts of financial instruments out there, that's the world that's been created. It's like, you get into debt to get and accumulate more stuff. Most of the successful people that I know that literally went from living in the garage to doing really well for themselves, or came to this country with absolutely nothing, didn't speak the language, were able to retire young and early in their life. Most of those people delayed gratification. So they had a dream, they had a plan, They were frugal with their lifestyle, with their spending, because they had an end goal in mind of where they wanted to go. That is contrary to how most people live, which is spend now, accumulate now, and basically figure out how I'm going to pay later. And we know that, it's often been referred to as a debt slave, and really that's, I think, the perfect term for it.
Debt slaves, that's just, you hit the nail on the head, because being out of debt really, really equates into freedom. Because let's say you're a police officer, and and you took that job with the idea of wanting to serve people and serve your community, and you're responsible with your paycheck, and you've put aside enough money, and maybe you've invested some of it, and you've maybe got a rental building, you've got a little income coming in on the side, and you've been responsible with your money. Now, if your commander gives you an order to do a warrantless search, it's going to be much easier for you to lay down your badge and walk away from that job if you're not buried in debt, living paycheck to paycheck, right?
That is an absolute great point. And, so many people, Mark, get stuck in the rat race simply because they have so many overwhelming financial obligations that they just find it so fearful, so radical of a departure from their current consciousness, from their current thinking, to say, you know what, I'm going to get out of this and I'm going to try to work it out, but I'm going to do my own thing. And, I will go out on a limb, and I'll just, put forward, and this is simply my opinion, I can't necessarily prove this, which is that I think that society's been built around this concept of get the masses into debt, in essence, so they can be good worker drones that have they have no other options on the table but to continue to trade their time for money, which is a completely outdated 20th century model, and continue to pay that debt, whether it's their home debt or whether it's the, a perfect case is talk about real estate is why the central planners love low interest rates, why they take them from 5% down to 3%. And one of the reasons is because they hope to fuel a refinance phase. And we know that in the first 10, 12 years roughly, mostly of what you pay is all interest. So if someone's been paying their home loan for 15 years or starting to pay down a little bit of principal, well, here comes the bankster and he says, well, you know what? I could lower your interest rate a couple points. You're going to save money. What they don't tell them is that they're just going to start paying another 10 years plus of interest only. And so really it's become a cultural conditioning that is all about debt and consumption. And I think that if you really want to break free of that, break free of the job paradigm, become fiscally responsible in your own life, because I would assume this audience is gears towards fiscal responsibility in government, I think those are some of the things you really got to be conscious of.
Now, do we have to be responsible for our own deprogramming? Because, there's a lot of money to be made by having us as debt slaves, right? So it's kind of garbage in, garbage out. I think you mentioned in one of your recent podcasts that you had read Robert Kiyosaki's book, Rich Dad, Poor Dad. That was a big catalyst for me to start trying to do my own thing and changing the way that I thought. What are some other good information sources?
Yeah, thanks for bringing that up. I'll just tell you, for me personally, Mark, when I was in my early 20s, I was basically in the party scene, in and out of jobs. I was pretty much completely broke. And it was a tough life for me because I was just so screwed up, didn't know what I wanted to do. And luckily, I met a man who introduced me to books like Think and Grow Rich and The Richest Man in Babylon. And, Dale Carnegie's book, How to Win Friends and Influence People, among several others. And that thinking was so radical for me at the time. And I began to just consume that information. The notion that everything that was happening in my life was of my own making, that the chaos in my life was of my own making, and that I could flip that like a light switch. I could either create chaos, destabilization in my own life, or I could create prosperity, health, wellness, you name it, in my own life. And that's what I hope people listening understand, because especially, Mark, in some of our listeners, I'll speak for my listeners. The majority of my listeners are libertarian leaning. And I would say by default, they're people that believe in personal responsibility and self-reliance. And if you're someone who believes in self-reliance, then, again, you're somebody who likely doesn't believe that, you're a victim, or you don't believe that somebody should exercise power or control over you. And as soon as we become victims, or we blame others, or we blame society for our financial problems or where we're at currently or in our life, we completely hand over all of the power in our life to somebody else. And that's why I think this message of self-reliance, of leaving the job paradigm, that's why I think it's resonating so well with this free thinking audience that already believes in this stuff, is because, again, when I started reading those books like Think and Grow Rich, The Richest Man in Babylon, they're books that completely blew my mind. And, that's a great place to start for somebody who really is wanting something more for themselves.
And you likened it to a light switch, and it is. It's a choice that you make, but not to mislead people to think that you're going to flip that switch and instantly the light's going to come on. It takes time. It's a little bit like sowing a garden, where you got to till the soil, get the soil ready, which is sort of reprogramming your mind, and then you got to put the seeds in there, which is sort of doing some work and getting it going, and then you got to kind of tend to that garden and keep the weeds out, and then after a while you'll finally get the fruits of it. But if you're not seeing the results right away, you got to keep going and not give up. Is that right?
That is, I couldn't have put it better myself. And, one of the things to really look out for in that garden are the weeds, because there's a high probability that most of your friends and family particularly, just out of love, will try to dissuade you from quitting that job, from starting that business. And you got to really be careful of who you allow into your mind and who you allow to try to dissuade you from taking action towards achieving whatever goals that you've set. So the weeds in the garden must be routinely weeded. If not, they will quickly overtake the garden.
And Fabian, why aren't kids taught to be entrepreneurs and taught to be financially independent in the school system?
Well, here again, Mark, I don't have proof of this, but I think many in the audience would agree. I think it's done on purpose. I mean, you look at something like Common Core that's being rolled out to public schools around the world, being supported by the likes of Bill and Melinda Gates and a lot of other people that are into that elitist, centrally planned type economy. And, they don't want innovators. They don't want entrepreneurs. They want worker drones. They want people that will basically fit in this little box and not be critical thinkers. And it's amazing to me, but I'll tell you, when I'm out with my kids, who I make it a point of trying to teach them, think critically, think for themselves, and I'm out and about with, just some of their friends or whatever it may be, and I see that difference, it's scary, because this is the future generation. So yeah, our current generation is taught about consumption. They're taught about instant gratification. They're taught that, getting a job is a good thing. They continue to be taught that going to college is going to lead them to a higher paying job. These are all fallacies that have been disproven time and time again. Not only that, they're completely outdated. And so that's why, look, if you have kids and you're depending on somebody else to teach them or to school them, you got to make sure that you personally are involved in that process if you're not doing it all together, because if left over to the state, the results are not going to be pretty.
And a great way for folks to start learning about the global economy and the problems that we're facing is to get your new book, The Global Economic Reset. Can you just give us a little snippet of what kind of things we'll find in there?
Sure. I mean, I wanted to put something together that was interesting, that was going to be something that's going to keep the reader engaged. And, there's been 6 economic resets in the last 600 years, and I think we're on the verge of the 7th reset. And the book basically discusses why that's the case. And it talks about steps that you can take now to not only depression-proof your life, but to insulate yourself from the devastation that will be unleashed to a majority of the population. I mean, I look at this, someone may read this book and say, well, it's doom and gloom. I actually look at it as a message of empowerment, because if you're informed about reality, instead of wearing rose-colored glasses, that makes you a better person to prepare for the storm ahead. And so I discuss a lot of that stuff. I also put forward, I think, different structural and policy changes that can be done all the way to at the local level and state level, because, make no mistake, this reset will eventually happen in the U.S. economy. And it's those that have the best ideas, hopefully, are the ones that will be able to reset this economy in a truly free market way, based on principles of our founders, instead of based on the principles of more central planning, more authoritarian control. And if they get their way, that's going to be bad for America and bad for the world.
And we'll have links to purchase the Global Economic Reset in today's show notes. But can you tell the folks where they can find your website and find out more about your seminars?
Sure, yeah. They could go to either fabiancalvo.me, or they can go to fabianforliberty.com. That's fabianforliberty.com, and all the info is on either one of those sites.
Well, thanks again for all of the great information and for coming back on the show.
I enjoyed it as always. Mark, thanks for having me on.
In American Reset, the final chapter of the Economic Collapse Chronicles, the ultimate contest between liberty and tyranny reaches the apex. The Bear family and their neighbors learn the true value of community as they rely on each other to survive the war and the effects of the financial meltdown. Will the collapse bring an oppressive regime that enslaves the American people, or will the patriots prevail and guide the country back to a place of freedom, peace, and prosperity? Get your copy of American Reset in Kindle, paperback, or audio edition at Amazon.com today.